Welcome, everyone. I will start in about 2 minutes. So if you have a chance to refresh yourselves, we'll go for about 35 to 40 minutes. And hopefully this will cover the Strata Insurance basics. If you have any questions, you can put them into the chat, and Daryl will be monitoring them as we go along. I already have 3 questions that people have emailed into me, so that is just wonderful. And we'll get started here at 12:01. Well, welcome this afternoon, everyone, and welcome and thanks for joining us for this webinar. Just a reminder to everyone, it is a webinar, so you're silent and we can't see your pictures either. So you're totally anonymous with respect to participating in today's session. This is about the Strata Insurance basics. And I will be covering the basics, but what you'll see at the end is there's a long list of variables with respects to Strata Insurance that we'll be covering in the spring seminars that are actually quite detailed and affect most Strata corporations. So many thanks to this week's sponsor, who are Brighter Mechanical, who do plumbing and, of course, repiping in buildings and do just a superb job of the restoration work that they undertake for members. This is a pilot project. It is a part of our fall webinar series, and we basically set out to develop a permanent 8-part education series that any council member, owner, property manager, investor, buyer could open up and look at any point, and to deal with specific information on a topic that may be important to them. I strongly suspect our 8-part education series is going to look more like 12 or 16 sessions, just so we can break them down into slightly smaller sessions, but be a little bit more detailed on the delivery for them. It's not legal advice. This is basically reflective of what the legislation is and best practices. But if you do have a matter that arises with respects to a legal obligation, it's really important that you get legal advice on this independently. We emphasize this more and more often. One of the issues that we don't talk about specifically during this webinar, but we'll make mention of it, is bylaws for insurance. I'm going to open the door on that a bit, but an insurance bylaw is actually a fairly intricate bylaw that does require legal services, which I would recommend all the time. The main reason for it is it's very easy with respects to insurance claims and disputes to find yourself either in the tribunal or the courts, and your bylaw really needs to be ironclad. So let's just start out at the beginning. How do we pay for insurance? So Strata Insurance is a mandatory requirement of the Strata Property Act, not optional. Question that I was dealing with last week was, can we opt out of insurance if everyone agrees? So it's a small bare land strata of only 5 units. And their basic concern is that we don't really insure much because we don't insure the homes, but can we opt out if all 5 owners agree? Bottom answer, simple. No, absolutely not. There may still be actions against the corporation with respects to liability, general liability, damages, injury, those types of items. And your owners could potentially be left without insurance, and your homeowner policies may not cover it. So, simple answer, no, don't do it. But you can talk to your brokers and simplify your insurance demands to minimize the cost just for the strata corporation. The details of what you must be insured for are set out in the Act and in the strata property regulations. This is not a made-up list. It's very clear, very defined. Insurance is a common expense of the corporation, and it forms part of the annual budget. So a frequent challenge we see with duplexes is that each owner will send in a check to the insurance broker, and then, of course, the insurance broker will set the insurance policy. That insurance policy is not always in the name of the corporation, must be in the name of the corporation. So if you do nothing else each year, pass a simple budget just for insurance, collect the money, have that insurance money paid for up on behalf of the strata corporations. The other thing about that's important to remember is while it's part of the annual operating budget, it is also an allowance now. If you don't have sufficient funds to cover your insurance, you can use your contingency reserve funds. Does not require a resolution of the owners any longer to do that. Whenever we're dealing with insurance, remember the relationships that you're associated with. You have the strata council, you may have your property manager, you will have the broker. They are the person who, as the word broker is they will place and negotiate your insurance on your behalf and the insurance providers. And then underneath them, you have the companies who actually provide the insurance. Very important when you're placing insurance to understand what type of strata you are. Get a copy of your registered strata plan and determine whether your strata is a bare land or a conventional building type strata. It's an error that is made frequently, and quite often the incorrect insurance is being placed on the corporation. A bare land strata is where only the boundaries of the land are shown. And the buildings on the strata lots are not shown, which means the strata corporation is not responsible to repair and maintain or insure for those buildings. A non-bare land is where the buildings are actually shown as dwelling units or apartment buildings or townhouses or high rises, and the strata corporation identifies all of those as common property and assets. They must be insured by the corporation. If it's a bare land strata, the first page will say bare land strata. If it does not say bare land strata, it probably is not a bare land strata. Again, the difference between bare land and non-bare land. So in a non-bare land, it's going to show on the strata plan the units, it's going to show the buildings, it will show cross sections, it'll show common property, maybe some facilities, assets, and the boundary of the lots within the buildings are shown and identified. It's important to show those boundaries and have those clarities, because those boundaries also determine the impact of where common property is between strata lots and common property. That relationship doesn't necessarily exist with the bare land strata. In a bare land strata, what we'll insure for are roadways, common buildings like a clubhouse. There may be some recreational services on the property, and underground infrastructure such as sewer and water and those types of components. They're all part of the strata's common property and the duty to insure by the strata corporation. An insurable interest of the strata corporation differs in a bare land and a non-bare land. So unless your bylaws are amended, and I add this caveat really quite importantly, because we do have bare land stratas where the strata has taken responsibility for the maintenance, repair, and insurance of the buildings, even though they're not shown on the strata plan, basically because every building was constructed to be identical, and it's easy for the strata corporation to maintain the asset management of those buildings. They're not that common, but they do exist across the province. In a townhouse complex, We have bare land stratas as well. We have townhouses that are connected where there might be 24 in a row, but you look at the strata plan, the boundaries are actually between each of the units. It says bare land, and even though they're attached, the buildings are not shown on the strata plan. These are more complicated, and they really require a bylaw to ensure that the strata corporation covers the buildings and the structures properly. There are party wall agreements between the units, but that doesn't guarantee every owner has purchased insurance. And in the event of a catastrophic loss, this could leave the strata corporation in an awkward position. You may need a bylaw to cover those types of buildings, the buildings where they are attached, but they are a bare land strata. Bylaws for insurance, I think you'll hear this a lot from many of the practitioners, are really essential because they provide clarity and direction. And in the event of a dispute at the tribunal, it really helps the adjudicators to manage their decisions that much quicker. With three basic types of policies that affect strata corporations. Obviously, there's the strata corporation policy. There's the policy that strata lot owners hold and carry. And then there is a landlord-tenant policy. And they're not always necessarily, the strata lot owner and tenant policy are not always necessarily connected. So, required by law, we must cover the specified property. So this is the common property, common assets within the strata corporation for full replacement value for the list of perils that are set out in the Act. So full replacement value means what does it cost to replace it today? The perils are the different types of risks and claims that occur. The liability coverage that you must carry for your strata corporation. And so this is for things like injuries or losses or, damages that may cause harm, is a minimum of $2 million. However, if I was in a multiple strata corporation sharing common facilities such as swimming pools, or our strata corporation had a swimming pool, or we're a larger strata corporation with commercial space, I would be looking at getting my liability coverage raised to $5 million at least, or whatever is available on the market. That's a little bit of our challenge these days. The strata corporation policy covers common property, the common assets, and these are going to include things like furnishings in your front lobby. Might include a snowblower, a pool table in a club room, might include a hot tub that's been installed by the corporation. There can be a number of assets that the strata corporations own. It may also be items such as a lease of a vehicle, like a tug for pulling garbage bins in and out of buildings, and other types of vessels that are used within your building. Owners and tenants are named insureds on your policy. I think this is something that many strata corporations don't pay attention to. And a common complaint we get is our deductible is $50,000. 6 units have been damaged. It looks like it's about $80,000. The Strata Council has decided not to file a claim because they don't want our insurance to go up. And our homeowner insurance won't cover these damages because it's a strata claim. What do we do? Owners and tenants, you pick up the phone and you talk to the broker who represents the insurance of the corporation. This is one of the reasons why everybody gets a copy of the policy at the AGM as part of the insurance report, because owners and tenants are named insureds and entitled to the benefit of that policy. If the strata corporation wants to limit claims, if they want to block a repair to a unit or something that's going to have a derogatory effect, just remember, owners and tenants are named insureds on the policy. You have all the rights and benefits of that policy. The strata corporation has to insure buildings shown on the strata plan. It could be a variety of buildings for multiple uses. And again, if it's a bare land, you're not going to see the buildings on the strata plan. Except for a bare land, fixtures that are built or installed by the owner developer. So the fixtures, the word fixed is what you want to really be focused on here. Anything that is attached or fixed to the buildings. So these are all of the components in your building, such as bathtubs and toilets and kitchen cabinets and original carpeting that's been installed. And you might have built-in dishwashers that can't be removed. You could have cooktops that cannot be removed or exchanged. There could be a variety of things that occur that are fixed to the building that were installed by the developer. That's what the strata corporation must ensure. Here's the definition from the regulations. These are items attached to a building, and they include the floor and wall coverings, electrical and plumbing fixtures, but it does not include items if they can be removed without damage, such as appliances. So things like microwaves, washers, dryers, easily removed dishwashers, refrigerators, stoves, things that are not built into the cabinets or the structures. They are not the items the strata has to insure. They're the responsibility of the owners. They're also the responsibility of the owners to maintain and repair them. We often have confusion between the obligation to maintain and repair a strata lot versus the insurance of the strata lot. Owners must still maintain and repair their strata lot, and you'll see that in a slide coming up when it comes to whether a claim is above or below the deductible. If it's above the deductible, or if it's a claim on the corporation's policy, then the strata lot itself, in the internal sense, will be covered for restitution and restoration. So the strata corporation must also maintain property insurance that covers major perils. So I talked about the perils. These are the events that occur. So fire, unfortunately, this year was a very bad year for fire in BC with respect to homeowners. And we've had multiple building losses, which is going to create a whole new topic for spring seminars, because homeowners need to understand, and strata corporations, how do we deal with a complete loss when the insurance pays us out. Smoke damage, whenever there is a fire, smoke and water escape, excuse me, are the most common damage in the buildings. The structure of the building may not be damaged, but water and smoke are going to be extensive. Windstorm is an included peril, hail, explosion, lightning strikes, riots, which unfortunately we do see on the occasion, or civil commotion, and impact by aircraft and vehicles. We have had both of those over the last 10 years in British Columbia, and vandalism and malicious acts. So it's a fairly broad list of, just think of it this way. These are things beyond our control, caused externally by another party. These are the perils that we're trying to cover. But we have optional coverage. Earthquake is optional. It is not mandatory. The cost for it is not unreasonable. The cost comes in the deductible amounts. And depending where you are in the province, you may or may not be able to buy earthquake, or if you can, your deductible may be very high. And we'll look at that in a moment. Landscaping is optional. In most properties, landscaping is seasonal, and they tend not to insure it, but we do have strata corporations who have very large internal gardens in lobbies and hallways that are an integral part of their community. They do have specific policies to protect that landscaping. Money and securities, we do have levels of insurance available. However, it is very expensive, has substantial limits to it, and the conditions around it are onerous. Your securities, I would only assume, would be investments the strata corporation would use with respects to contingency funds or special levies, and those must all be under accounts secured by some level of government or an institution, a financial institution in Canada, so that there is virtually no risk. So there's not really a point to try and insure for money or securities. Plants, again, like landscaping, it's optional, it's very limited. Environmental damage and restoration is optional. However, if your strata corporation borders or boundaries a creek, stream, or river that has the potential of damage, either through a discharge of sewage or fertilizers or other materials, you could be fined substantially for it. Has occurred, and you may want to look at what kind of environmental damage you potentially could be insured for. Loss of rents or income, it's optional. Strata corporation may own a caretaker suite, may have a rental suite. There could be loss of rents or income that the strata corporation wants to insure it against. Theft or fraud by an employee, optional, and again, very limited. And then any additional fixtures or components that are constructed on the property that were not part of the original construction. So the developer sets out to build a building. So think of it kind of like a I forgot the term that they use, but the day you moved in to the building, other than the removable appliances, basically everything is a fixture to the building. Some drapery might be removable, but things like electric fixtures and plumbing fixtures and HVAC systems and finishings, those are all part of the fixtures of the building itself. We have commercial policies. So we have commercial enterprises operated by strata corporations or operated by a person who owns a strata lot within the strata corporation. So we have things such as golf courses and marinas. We have partnerships in communication systems or industrial property. These come with a significant amount of risk associated with them. They require a detailed amount of evaluation, but they do and can potentially expose your strata corporation to significant risks. So in addition to property damage and the business operations damage insurance, what you really want to look closely at is your liability insurance. And is it sufficient for the operations that your strata corporation is running? You want to look at whether you have appropriate insurance, what the coverage is, but always look at the deductible values. The deductibles can have a significant impact on the affordability of the insurance. It's fine to say, look, we got a great deal on our insurance this year, but then you turn the corner and look and say, oh, but we have a $250,000 deductible. That might not have been such a good deal. You need to work with your broker and figure out what the balance is and what's available to your community. We also have some really interesting exposures around marinas in British Columbia, both freshwater and saltwater. So we have docks, we have fueling stations, we have discharge stations, there are rentals of boats, rentals of other water equipment. A very high level of liability comes with those. They can easily be insured, but you have to be very clear, specific, and detailed on what your insurance needs are going to be. For full replacement value, full insurance coverage is absolutely essential. Otherwise, you may find that you could be limited to the amount of a claim that you could recover. We get routine appraisals of our insurance, of our assets, our common property and assets. Those appraisals are then used by the brokers to set the value for what your full replacement coverage is going to be. Always talk to your broker. This is a little tip, but it's also a personal issue. Do not buy insurance for your strata corporation online. You speak with a broker who provides you with information. You may confirm information by email with them. You may confirm your conversations so that you have some backup, but it's too easy to miss out a key component or an exclusion if you're purchasing insurance online on behalf of your strata corporation. Also look at conditions that could potentially change full replacement value. One of those conditions could be heritage buildings. We may not be able to replace the heritage building if it's a total loss, and full replacement value in current market costs could be prohibitive. So look at any of the conditions that apply. And then, of course, with respect to your policy, if you've had any material changes to your property over the last year, you must notify your broker and let them know what they're insuring for and any changes. In the strata lot owner's policy, owners are responsible to insure for their personal property, betterments to their strata lot, personal risks, which include a coverage for a strata deductible, or if you're sued by a neighbor because it covered a flood, and living out allowances. So it's basically another layer of insurance, much in the same fashion as the strata policy, but for the personal protection of the strata lot owner. Given the high deductibles that we have in many communities today, the best insurance that you can obtain to cover those deductible amounts is advised. However, it's not always possible. Individual homeowner insurance coverage brokers are having a really tough time placing coverage for deductibles above $100,000. And it's essentially what it is it's a way of distributing some of the risk to other parties. But as an owner, if you have other occupants in your unit, you have visitors, or if you have tenants, you are ultimately going to be responsible for any claims on the insurance policy if it's discovered that the parties using your unit were responsible for the claim. The Strata Property Act does not require mandatory insurance for strata lot owners, but as a good practice, I know that the legal practices across the province always recommends when you're doing an insurance bylaw, include a section on advising strata lot owners to obtain homeowner insurance and to make sure that they've covered all of their betterments that are associated with their strata lot. Under section 154, we have basically the definition of what you as an owner might be responsible for. So you're responsible for personal property. This includes your clothing, your removable appliances, any of your artwork, musical instruments, any upgrades that were down to your unit as part of your betterments. Your personal liability can be triggered. You could have a loss in your unit that affected 2 or 3 other units that were below the deductible, so none of them were covered under the strata policy. Those other owners or their insurers do have the ability to sue you for their losses. You have to insure for buildings that are shown on the strata plan, but as a bare land, it will show if there are buildings that are on a strata lot that are not shown on a strata plan as well, to determine whether it's a bare land strata and whether it's insured properly. Also insure for damages to a strata lot that may not be covered by an insurance policy. There may be some exclusions associated with your strata coverage. So I own a bare land strata lot. I have my home. My home is a building. It's not shown on the strata plan. I must insure for that home and I must maintain and repair it. Those are all of my obligations with respects to that home. But the building scheme might be an important part or an important document with respects to rebuilding my unit in the event it was destroyed. Make sure you provide a copy if there is a building scheme for your bare land. Make sure you provide a copy to your broker when they're setting your insurance as well. That may have an impact on what type of coverage that you have. And then, of course, the other item, which is huge, is always make sure you have coverage in the event you're responsible for an insurance claim. We've had a few changes in the past 2 years. The first one is if your strata corporation policy changes, you have an increase in insurance deductibles, there's a new exclusion or omission, or the strata's insurance is potentially being canceled, you must inform the owners as soon as feasible. I take as soon as feasible as immediately, because we've had a claim recently where the policy changed. There was the strata delayed by about 10 days notifying the owners, and in the ensuing time period, the owners had no knowledge to increase their deductible to a higher amount. The strata corporation had to pay the difference for the deductible. It was not recoverable because they failed to inform the owners. I think you need to look at that closely. Don't wait till the next AGM. As soon as the new policy comes out, the best solution, mail a copy of it to all tenants and to all owners in the strata corporation. Here's another change. What happens when there's an increase in the premiums and it's not within our annual budget? You can now expend these costs from the contingency reserve fund. You can also have a loan. So there's 2 types of loans for insurance. One is with the insurance brokerage. They may provide a financing option. If you do provide financing, it is a loan under the Strata Property Act. Make sure that you ratify this loan as part of your annual general meeting. Where this applies, the loan rates are, the interest rates are usually very reasonable and affordable. And especially if you've had a massive increase in your insurance, this might be a necessity to move forward. The other thing that is important to understand is that if you have a deductible with respects to a common expense, the Strata Council has the ability to create a levy for this. So let's just talk about 2 different kinds of levies that are available. The first levy, of course, is if you don't have enough funds to pay for your insurance, you could have a special general meeting and levy the owners for the additional amount of money. That's the first option. But the second option is what happens if you don't have enough money to pay a deductible. The changes to the Strata Property Act under Section 59 are also a new addition, and we've been into 6 months of this now, and it's going very well. But the insurance certificate, which summarizes your coverage, your deductibles, who the broker is, the insurers, named insureds, all of those items, that document must now be attached to a Form B. It's part of the Form B information, so buyers have a sense of what they're being exposed to from a liability perspective. There's changes to the BC Insurance Act. Brokers have to provide notification to the Strata at least 30 days in advance if they are not going to renew the contract, or they're going to renew on different terms or conditions, or they're having difficulty placing your policy because of a risk or a loss or a problem within your community. Brokers must also disclose their commission rate or the actual value that they're charging on the policy. Either one, you can calculate what that is. And then the best pricing practices that we used to see, where we would have a subscription. I'll show you a subscription model in a moment, but the highest rate insurance would be applied to all of them, was having an unrealistic impact on the value of the property. Tenants and occupants' responsibility is for their personal property and personal risks. So general liability. They don't insure for the strata lot. They don't insure for the betterments to the strata lot. It's just their personal property. And again, personal liability. If you're a landlord, make sure you tell and inform your broker that you're a landlord, and that you have proper insurance to cover. That insurance could include loss of income in the event that the unit is not occupiable because of a loss or damages. So lost revenues, you could have a claim caused by a tenant resulting in damages to an insurance claim. This has certainly happened, and the landlord policy covered the deductible. Ultimately, use the strata lot owner. You will always be responsible for these costs. What is a loss limit? Here's a little bit of a challenge that we run into, and certainly right now with the high value of properties and the limits of insurance, we do have some buildings that have a loss limit value. So if the full replacement value is $25 million, but the insurance brokers can only secure coverage on 80% of the value, then there's only $20 million coverage. So here's the conundrum we get into. The strata requires coverage for full replacement value. There aren't really any options if you can't get full replacement value insurance. However, if you cannot purchase it, inform all of your owners and tenants in writing as soon as possible. I say immediately that we now have a limitation and we have a loss limit on our policy. That may help owners to purchase additional insurance or at least manage their risks. They can't do it if they're not informed. What about exclusions? We do have exclusions on buildings for a variety of reasons. Some of them might be floodplain exclusions. Some might be exclusions because the building has not been maintained properly, and there have been a number of leaks from failed polybutylene piping, and until the polybutylene piping is replaced with copper or a different type such as PEX pipe, the insurer has come forward and said, you now have an exclusion for any water escape associated with the polybutylene. So these exclusions will have a significant impact on the corporation. Confirm that all of your owners are aware of what they are, and try to deal with remedying the situation so that you can manage this exclusion or have it removed. And insurers do impose more restrictive terms to minimize their exposure. These are generally associated with buildings that the homeowners either don't want to make approved maintenance and repairs and upgrades to buildings, and there is serious damage to the building, or they're associated with buildings that had a really restrictive number of claims. It really affects affordabilities. If the policy cost and deductibles are so high, can we exclude a peril? So can we adopt an exclusion that could reduce the cost of insurance? The Strata Property Act doesn't give you, the Strata Corporation, that ability. I would suggest if you're wanting to consider an exclusion, because this question comes up frequently, you will need at least a special general meeting. At the very least, you're going to need a 3/4 vote. And at the very least, you're going to want to consult with a lawyer who deals with strata insurance and determine what types of liabilities and exposures you may have. Because both you as council members and the owners can be exposed to third-party claims. So subscription policy just simply means no insurer is prepared to take 100% of your risk or liability. So what we have is we have multiple insurance companies, and in some cases we've had 8 or 9 on a file, and they all take 10 or 15% of the risk. It helps to share the liability around, so no single company is carrying such a large amount of liability. But we do have some properties now, or strata corporations in the province that are reaching close to $1 billion in value. So think about that from an insurance obligation and from the insurance industry's perspective. Earthquake is optional. It is not mandatory. However, if you can manage it on an affordability basis, it is recommended. The deductible is where the value generally has the impact. Here's the example. You have a strata corporation that has a value of 12.5 million. You look at the policy, the deductible is 10%. That's 10% of the total value of the building. So in the event of an earthquake where we have shift in the building and we'll have window damage and water damage, the deductible is 1.25 million. This isn't going to be one of those claims where we're at $100,000 deductible. You might want to calculate out what this looks like. Some of the management companies are actually, when they send out the notice for the annual general meeting, they take the value of the earthquake deductible and show what it would look like as a special levy for every owner. And an important part to understand about this deductible is in the event we do have an earthquake, and we have had buildings in the province damaged by earthquakes, so this is not unanticipated, and we certainly are being cautious about the future. But when they send out the notice for the AGM, they show the formula of how much everyone's deductible share of an earthquake would be. This may be additional coverage that you can adopt on your policy, on your homeowner policy. Seriously though, think about the risk of the deductible amount and look at your homeowner policy that you have correct coverage. The other thing is you may or may not, as a homeowner, be able to layer on earthquake coverage. There could be additional limitations, or your strata corporation may simply not qualify for earthquake coverage, which is the case in some areas. And so you as a homeowner may have that same exclusion. Claims made against the strata's liability policy. So the claims that are made against the strata with respect to errors and omissions. So these are the kind of common things that occur. Strata corporation has given the wrong information either to a buyer or to a seller, and it results in a claim or a loss by those parties. This is where the errors and omissions insurance comes into effect. It's called directors and officers on many policies. It's also called errors and omissions insurance. It's in the event of an error or an omission that results in a loss to a party. And we've certainly, again, had these. We've had recent decisions in relationship to the incorrect number of parking spaces or wrong parking spaces being identified on a Form B, resulting in a claim against the strata corporation. Civil Resolution Tribunal is a separate layer. As many of you know, it is represented by the strata corporation and by the individual owners, whether they are responding or commencing a claim. There is generally not legal representation, although it is permitted at times. But do you have insurance coverage in the event that representation is permitted? It's a question that's worth asking because it could be a benefit for the strata corporation. Again, here, the directors and officers, there can be quite a wide variety of coverages. So don't just assume because you've seen D&O coverage or errors and omissions on your policy that it's a blanket coverage for your activities. Look closely and ask for the particulars of it. Your policy will contain the particulars of what you're insuring for in D&O policies. Failure to maintain insurance is not covered under D&O policies. If you have not placed or maintained the correct insurance as a strata council, you as strata council members are exposed to liability with potentially no D&O coverage. Employee disputes are outside of directors and officers' liability policies, as are human rights, evictions, wrongful entry, breach of contract, or failing to render a service. So, you really want to look closely, not at what we're exempted from, but ask the question of your broker, what are we really covered for? I do have a lot of appreciation for the brokers in our province. They work very hard. They provided generally good service. They've been met with just horrific window of insurance increases or even availability that no one could have anticipated. But our insurance industry is turning around at a nice level at this point in history. So if you don't meet the minimum requirements of the Act under your insurance policy, and you're not insured to meet those minimum requirements, there's a pretty good chance your D&O coverage will not cover you in the event the strata corporation is sued. Also a concern for property managers, because property managers are named insureds on the policies, they are agents of the corporation, and they can certainly be a party to lawsuits if they arise. If your strata knowingly violates the legislation, and it has something to do with fraud or a human rights claim, wrongful entry into a unit, a breach of a contract, if you're conducting any of these inappropriate activities and breaching the Act, you can be pretty sure that your D&O coverage is not going to protect you. So how do we deal with after a loss has occurred? So your first obligation is always to mitigate loss. You call the restoration company, the emergency responders, to deal with water, of course, which is the worst of everything. If it's a fire, it's a 911 call first. Ensure that the fire department are on site, and hopefully the damages can be mitigated, but life safety is the first thing. Your next call on the list is to your insurance broker, who can take an incident report. They're going to put you in contact with an adjuster, possibly with an emergency contractor, to mitigate damages. And the repairs or restoration, or at least the abatement, is going to begin. Once you've reviewed the deductibles and you've estimated cost of repairs, then your adjuster will give you an idea on the scope and whether it's going to be above the deductible, in which case you're going to file an insurance claim, or below the deductible. If you have 4 units that are damaged, they are not 4 separate units. It's one damage to 4 units. That's the gross amount of the claim. Do not try to sever this into 4 separate claims to try and avoid using the strata corporation's insurance, because what will happen is one owner or tenant is simply going to contact the insurer and file the claim. The adjuster becomes a very good partner with you with respects to determining the damages on your property, and what is going to be covered, the cycle or the sequence that's going to take place, the contractors, the method of how the contractors are going to be hired for restoration. It gets more complicated when we go into total losses for property, though. If you're proceeding with a claim, your strata council needs to determine whether or not you have the ability to recover the loss against a party. If a claim is below the deductible, then you need to look at whose property was damaged. If a strata lot was damaged and the claim was below the deductible, the strata lot owner is responsible for the repairs of their strata lot. But if it's common property or limited common property that's also damaged, the strata corporation is responsible for damage to the limited common property or common property. Bylaws that deal with repair and maintenance are about the responsibility of an owner to maintain and repair a strata lot. Those bylaws that really come into effect and apply if the deductible amount, if the claim is below the deductible amount. Because what we're just dealing with now is not an insurance claim, but repair and maintenance of a strata lot by an owner. And again, if any common property has been damaged, it's the repair and maintenance by the strata corporation. Strata corporation has no obligation to repair damaged parts of a strata lot. Where there is no insurance claim, or if you have no applicable bylaw that affects this area. The strata corporation is not the insurer. So if the amount is below the deductible, the damage is only to strata lot 5 and not to common property, then the owner of strata lot 5 will be responsible to either for filing a claim on their own homeowner policy or executing the repairs to their own units. Here's a chart that we have it posted to the website everywhere. It's basically above and below the deductible. And so the left side is if the strata corporation is above the deductible, then first thing we always look at either side is what was damaged. If it's common property, if it's above the deductible and it's common property in the strata lot, the strata's insurance will cover all of those repairs except for betterments to a strata lot. If it's below the deductible and it's in the strata lot, the owner repairs all the damage to their strata lot. If it's common property, the strata corporation repairs all of the common property. Strata lot owners are responsible for repair to the damage to their strata lot if it's below the deductible. So this is standard bylaw number 2. An owner must maintain and repair their strata lot. And remember, they're responsible for any betterments. Buyers who come into units frequently are unaware of betterments to the strata lots. And it's something that they should be much more mindful of because strata corporations often don't track that information. Once your strata corporation who's determined who's responsible for loss, then you might proceed with a collection. Someone's washing machine is overflowed, they weren't home, it continued to run, flooded out 5 units, a claim on the strata's strata's insurance. You as the strata corporation will probably move forward with an action to collect the deductible from the owner. If you can collect the deductibles, it's a valuable exercise to do. Really, there's 3 steps to determine if an owner is responsible, what the location or the origin of the claim was. If it's a common pipe in a wall, generally it's a common expense of the corporation. However, if it's a new fixture that somebody installed in their sink in their kitchen, and that's what's failed, that location alone might determine that it is actually the owner's responsibility. They caused the claim, they caused the damage by their action. So the cause of the claim at this point becomes important to determine who pays the deductible. And then, of course, look closely of the bylaws of your strata corporation. I don't think we can overemphasize this, but bylaws form an essential part of your ability to enforce collections for insurance deductibles and damages. They really define responsibility, the obligation to compensate the corporation, and the costs associated with the claims, which can include significant legal costs depending on the value of the claim. So look closely at your bylaws. And again, we strongly recommend legal advice for insurance bylaws. And the reason being is we're dealing with potentially large amounts or potentially large losses, which can end up in the courts or the tribunal, and your bylaws will undergo quite a lot of scrutiny as you go forward. When the strata corporation doesn't have sufficient funds to pay the deductible, I mentioned this earlier, you don't have to deplete your contingency funds if you don't want to. So let's say you've had a common expense, a common area pipe is leaked, you have a $250,000 deductible, and you only have $100,000 in your contingency fund. The strata council can automatically levy all of the owners based on unit entitlement for their share of the deductible amount, and it does not require a 3/4 vote resolution. And the reason for this is whether it comes from a levy or from the contingency, it's going to have to be paid. There isn't an option of deferment. This is the only time in the Act that the strata council can impose a levy without the approval of the owners. Council, if in this case, would hold a meeting, you vote on the resolution that approves the levy, and then you issue out the notice with each share and the date of the levy. The wording and the conditions of the levy also have to comply with Section 108 of the Act, which sets out all the terms of a special levy. You can also special levy even if you have sufficient funds in your contingency fund, because the alternative is you may be deleting entirely any reserves you have for emergencies or planned repairs that you've already authorized from your contingency fund. So this may be an option when you're dealing with this. Some best practices for insurance. Maintain an active, direct relationship with your broker and talk to them about everything, about your renewals, risks on your property, changes in your property conditions, your history and your claims history. Requesting a copy of your claims history can be quite enlightening when you look at the type of issues that have arisen and the causes. It may in fact disclose a defect on your property that is not being attended to or dealt with. Understand closely what your limitations on coverage and your renewals are. And more important than anything, after you've had a conversation with your broker, send them an email and confirm all of the details in writing to avoid misunderstandings. It's really kind of scary sometimes when we see how much misinformation is conveyed by property managers and counselors and owners based on simple discussions. Confirm the conversations in an email so everyone is clear on the understanding and the expectations. In the spring, we're going to run a very detailed insurance seminar, and I think this might be really helpful because this has been, many of these issues have been coming up quite a lot. Multi-building operations and shared use facilities have some very intricate insurance liabilities. You have 4 or 5 strata corporations sharing a parking garage and a clubhouse and tennis courts and a swimming pool. Insurance is an issue in those circumstances, as well as commercial, retail, office spaces, and hotels. They have some very unique insurance obligations. Industrial and recreational use oftentimes will have exclusive needs that we won't find in other locations. And those are, we find that these frequently have geographic implications to them as well. Items where you have parking facilities or storage facilities that are a separate strata corporation, the insurance requirements there don't just load on to your strata corporation without some contemplation of a separate policy. Leasehold easements, foreshore leases, all of these types of special arrangements for use of property come with insurance obligations and frequently are not included on policies. Airspace parcels in buildings where you have multiple airspace parcels above each other, there are frequently obligations for maintenance, repair, and insurance that need to be identified, and you need to understand how they are identified. Sections is a question that comes up quite frequently on insurance. And unless the sections have separate insurance needs, it's still just one strata corporation, but we do find bylaws that prescribe additional requirements for insurance or for liability for owners. Fairland stratas have some unique insurance requirements. And then duplex, triplexes, and fourplexes, just the method of guaranteeing that your building is insured properly is absolutely critical to make sure that you can protect your owner's interests. And then the final item we're going to deal with, which we've unfortunately have had to do because of the fires in the interior this year, is how you're going to deal with a major claim and a complete loss of buildings. It's not as simple as everybody thinks it is. It's actually quite complicated because what was anticipated or what was evaluated or what was insured for may not be sufficient for what you need to rebuild a property. Or are you going to distribute the funds? Is this going to be a wind up? What's going to happen with your property? So there are a lot of variables and questions as we go forward. So I think that's insurance basics, Daryl. I have 2 questions that I'll answer, and then you can tell me if you've got any others. So the one question, 2 of the 2 that I have from email, the first one is, if we have separate sections and a claim occurs in one section, so we have a high-rise building and we have townhouses. The townhouses have had a fire and there's a claim. Who pays the deductible? The deductible is always a common expense of the corporation. It doesn't get broken down by sections. The deductible is a common expense of the corporation, and if there's a party who's been responsible for the claim, the corporation has the authority to go after that party to try and recover the amount. The other question, which I think is actually surprising, doesn't come up more often. Do we have to inform the owners if there have been any claims filed on the strata insurance? There isn't anything in the Act that obliges this, but there are going to be so many decisions and so many events that occur at council meetings that and decisions made that those decisions need to be in the minutes. So just by virtue of the minutes of council meetings, owners will be informed. And I think informing owners of claims is a prudent measure. It also helps to really prevent sticker shock when you get to the next AGM and find that your insurance is increased dramatically.
Wow. Yeah, we do have a couple more questions, Tony. First one is, if Strata has no insurance, will owners' personal policies step in, or could they refuse coverage?
Oh, it's a complicated problem because it's not only if we have no insurance, but the question is, why do we not have any insurance? So it's a twofold issue. The recommendation, of course, is if there isn't insurance for the Strata Corporation, that every owner is notified immediately of it, so that they can contact their home insurers and find out to what extent they can purchase insurance to help cover some of their risks. But we do have the odd building, as a result of some incredibly high values and high insurance claims, that simply can't buy insurance on the current market right now. So they are looking at options. They're looking at funding and financing values, and they are looking at conditions that may be imposed beyond their control. A municipal authority, for example, may have imposed a condition on the property that is making it almost impossible to purchase insurance. So, when this occurs, your Strata Council needs to have a sit-down meeting with your lawyer to figure out, why do we not have insurance? Do we have any options? Are exclusions possible? Is there some way we can at least obtain minimal insurance?
Super. Next question would be, can you please speak more about paying insurance using the money from the contingency fund? Is it a one-time thing, or can a Strata Council use the contingency funds to pay yearly insurance premiums moving forward?
It's not intended to pay yearly insurance premiums. What it's intended to do is to offset an amount that was not budgeted for in the annual budget. So if we budgeted $200,000 and the insurance policy comes in at $275,000, the Strata Corporation may expend the additional $75,000 from the contingency to pay for the insurance. That's what the intention was. It's not intended to replace insurance as an operating line item, but it's one thing that Strata Councils might want to look at. How do you coordinate your insurance renewal in your annual budget so that you can actually have your renewal before you approve your annual budget, and you can allocate the correct amount of funding?
Great. Another quick one here. Is a bylaw requiring owners to have personal coverage enforceable or advisable, or what other options are there?
You can't require owners to have personal coverage. The Strata Corporation has no interest in a person's personal liability or their obligations to insure. And the difficulty with a bylaw like that is that you would then be at risk of not having given them proper instruction or information necessary so that they wouldn't have any types of omissions or exclusions, or if they weren't properly insured. The other problem with it is, if you have a bylaw that requires homeowners to insure, who's going to regulate that? How are you going to get access to it without breaching privacy laws? Who's going to manage that information? And what happens when somebody doesn't purchase a policy? There's no effect to the corporation if there's no claim. So what would you be penalizing them for? I think if you're going to have insurance bylaws, have a very strong recommendation for all the reasons that we mentioned earlier, why you should have homeowner insurance.
Right. And lastly, if we could, why do we need to inform tenants of our Strata Corporation's insurance policy?
Because tenants are named insureds on the Stratus policy, and tenants can be exposed to liability if the Strata is not properly insured as well. So, a tenant can also be a council member. Remember that, right? So with the consent of an owner, they can assign the rights of the tenant. Tenant can be a council member. That tenant would be covered by the Strata Corporation's liability and directors and officers insurance. So tenants have an interest in the property by virtue of their tenancy, and it's important to recognize that. The other item, while we're saying that, which I didn't mention earlier, it's also important that the property management company be named on your insurance policy for liability and directors and officers, because they're your agent. In the event there's an error that results in a loss or a claim, you want to make sure your policy covers them, because as your agent, you're ultimately responsible for anything that may incur as a result of their business.
Super. That's it.
Excellent. Well, that was longer than I planned, but you know, I don't know how we could ever take this one unit down smaller. And notwithstanding any of that, we have all of these other topic areas of insurance that we didn't even get into. That, you know, like we need to talk about these in detail because these are coming up frequently across the province now as incorrectly insured, insufficiently insured, or the strata corporation just simply doesn't understand the type of insurance that they need. So, you know, I think our spring seminars are going to be interesting, a little bit juicy, and we're also going to cover in depth with what has happened this year of what occurs with a strata corporation when there's a total loss of a building, because it really is a complicated process when we start looking into it now. Excellent. Thank you, everyone. It's a pleasure as always. If you have any feedback, please send us any note, send me any feedback, any information. These slides, this information gets posted to the YouTube website right away, so you'll be able to get it tomorrow. That'll be just perfect. Later today, it probably should be posted. And then, of course, there's a significant number of guides that are available on the website as well. So take advantage of all of the website guides. They can help you with checklists and forms and reporting and information. So everyone have a wonderful day, and we will see you next week for session number 8.